and welcome to Daily Trader. It's Tuesday, November 26th. I'm Alex Coffey in for Kevin Hanks, taking a look at the market action for this morning, about, let's call it 45 to an hour into the trading day here on this Tuesday morning. We got a little bit of strength in the market, depending on the market that you're looking at, but a little bit of wobbliness here post some economic data that came out half an hour after the market opened. We'll go through that. Looking at the S&Ps right now, they are green. NASDAQ's green as well. Let's pull up a heat map, though, because what you're going to see is kind of an inverse of what we've seen the last few sessions. What you're seeing is mega cap tech strength keeping this market afloat. The other broader part of the market, you see this in the Russell 2000 as well, which is down over 1% here in real time, is struggling a bit today. So kind of a give back of the last few sessions, which had seen names like NVIDIA, names like Microsoft lagging a bit. You're actually seeing those names keeping things afloat here with the broader market struggling just a little bit. In real time, only about 1/3 of the S&P 500 names are higher. In the case of the NASDAQ, it's less than 40% of those names are trading higher on the session. So again, a little bit different, but more of a market that we've seen the last few years, which has been one that's been led by these mega cap tech names. Speaking of big tech and speaking of earnings, which of course drives stock prices so often, we got a couple example trades we're going to look at in two names that report earnings after the bell today. One of which is Crowdstrike, a name that's made a lot of news headlines this year. Another in DELL Technologies, a name that's really made a comeback in terms of its relevance the last few years after being a powerhouse in sort of that .com time frame. Let's start with Crowdstrike, a name that of course made a lot of news over the summertime with the outages that it saw and the ripple effects worldwide. Its relationship with Microsoft largely a reason for that. It saw a lot of downside reaction to that. Stock went from 400 a share nearly to down near 200 a share, but it's made a pretty impressive comeback, and it continues to be a story that is one worth watching. You see this chart overall, just how volatile it was in that middle parts of the year, really starting to stage a comeback here. I was looking back at its performance around earnings. The average one-day price reaction is over 8% in either direction. Does split. There's some, of course, days where it's gone lower. I'm looking back at one in 2022. You saw the stock down almost 15%, so it certainly can go lower. But over the last five, all five of them have been higher with, one a couple quarters ago that was almost 12% higher in reaction. As far as the actual earnings versus the estimate, has not missed, at least versus the numbers that I pulled up looking before the program. So a name that has done really well in terms of its performance over the years, and one that has largely moved around quite a bit in reaction in earnings. What I looked at for an example trade is a call diagonal spread in this name. So looking for more of that upside to continue, using options to create a structured trade that will benefit from that upside if it happens. Now, traditional calendar spread could come to mind for some as well, but I talked about this before on other editions of this or other program we have across the Schwab Network, which is the diagonal for a little bit more risk or a little bit more debit can improve your increase your margin for error because it eliminates that upside risk if it's structured in a way where the debit is less than the width of the strikes. In this particular case, that is the case. Went out to next week's expiration and looked at buying the 390 call as the long leg of this particular spread. It's pretty much at the market maker move, which of course is doing some math to look at options and calculating a standard deviation price range. And then selling an out of the money, even further out of the money, 400 strike call in this week's expiration, with the idea being, hey, this is a $10 wide call diagonal, and you can see that debit is only $4. So it limits your risk to $400, but it gives you a strategy that will benefit from a move, particularly one towards 400 a share. So when you're looking at this style strategy, obviously you select your strikes with them in mind of where the stock could go. So the idea behind this would be someone who thinks this stock could test 400 of those old highs, maybe in reaction to this earnings event by the end of this week, and that gives them a chance to potentially profit on the trade. When you look at how analysts kind of shape up with this particular stock, 80% of them say buy, where 16% say hold, and then 2, which amounts to just under 4% in the sell camp. So pretty positively skewed in terms of analysts and their coverage of CrowdStrike. Looking over to Dell and taking a look at how analysts break down in Dell, a name that has certainly been one to watch this year is its relationship with sort of the AI build out and kind of the optimism and how that swings back and forth. 85% of names, or 85% of analysts rather, say to buy this name. Just one analyst says to sell. That amounts to less than 4% of those that cover it, and then 3 in the hold camp with just over 10%. So again, another one that skews relatively positive. Hasn't made a high since earlier in this year, but still one that has done quite nicely and is again trying to make a comeback itself. Looking back at its performance, going back to 2019, I only see 2 misses on EPS versus the estimate, and they haven't taken place since 2022 where there's a miss, and then a slight miss by less than 1%, basically an inline release back in 2020. Now, in terms of performance around earnings, it has been split over the last 4, 2 up, 2 down, with the average price move around 8%. So again, another name that's relatively volatile and one that earnings have been a little bit more mixed in terms of how the market reacts to it. From a trading standpoint, with that in mind, I looked at a strategy that has a little bit higher probability of success because the break-even is actually lower than the current share price. What I looked at, and this took into account a moving average for 1 month. If you were to look at like a 21-day EMA, it was around 135 for Dell, and so that could act as a support level. Doesn't have to, but could. And so I looked at a December 6th, which is next week's expiration again, 135, 132 put vertical. It's a $3 wide spread, which I think makes it quite interesting when you talk about risk-reward ratios and you start thinking about collecting the width of the spread. Well, we always talk about 1/3 as a loose guideline to kind of start with. Well, on a $3 wide spread, 1/3 is $1. So it makes the math really, really easy. It makes a 2-to-1 risk-reward in this case because it is a $1 credit. And with that in mind, you're risking 200 with a chance to make 100 and a break even of 134. So that gives you about $9 in cushion to the downside where you could still break even and potentially just be, flat out wrong, because you would put this strategy on if you were bullish this stock. It's a neutral to bullish strategy, but you have $9 in cushion to the downside. One of the things that I think is alluring about options is how you can structure strategies with varying degrees of probability of success. So looking for a positive or even unchanged reaction in Dell post-earnings. But both these names, after the bell, make sure to check those out as they could move the market a little bit in terms of what they say. Also get Fed minutes later on this afternoon. That could influence the market's movement as well. But thanks as always for tuning in to today's edition of Daily Trader, and we'll see you tomorrow.